Hello and welcome to myfinanceteacher.org. Let's continue our series on reviewing the fundamental value of some of the larger gold producers. Remember, this is fundamental value, so how the actual market price of their shares changes from day to week is a bit of a different matter. Today we're going to look at Pan American Silver, Eldorado Gold and Equinox Gold, all very interesting miners. For some of the additional details on why I think they are interesting, stay until the end of the video. This review is based on their Q2 2024 reports. As usual in our model, we look at discounted per share value after all-in sustaining costs, long-term debts and taxes. And in our model, we only look at proven and probable reserve as well as half of measured and indicated resources, without taking into account any of the inferred resources, never mind any of further exploration success. So to the extent that the market price might actually correctly value some of the future potential success, the fundamental valuation presented here might be different. But as you see, we like to lean conservative here by looking at relatively more established reserves in the ground. And of course, the data that we plug into the valuation model includes the prices of gold, silver and copper, the amount of reserves and resources in the ground, the costs of extracting those reserves. We'll look at all-in sustaining costs, we'll look at long-term debts and taxes. Of course, we'll look at per share value with a discount rate of 5%. And we have a bit of a secret sauce on insider shares, as larger percentage held by insiders helps to align the incentives of the management with those of the regular shareholders. Now, looking at their reserves and resources, Pan American Silver has 6.9 million ounces of gold. That's proven and probable reserves of gold. In addition to that, exclusive to that, M&I resources are over 15.5 million ounces. Pan American has proven and probable reserves of silver at 468 million ounces and over 1.1 billion ounces of silver in M&I resources. Beyond that, they have over 100 million pounds of copper. Moving on to Eldorado Gold, they have over 11.3 million ounces of gold, additional 11 million ounces of resources of gold. They also have reserves of silver at over 37 million ounces and additionally over 57 million ounces of silver resources. Beyond that, they too have quite a bit of copper at over 1.6 billion pounds of reserves and 830 million pounds of resources. Equinox here has the largest amount of gold, but they don't have silver or copper. They have over 19 million ounces of proven and probable reserves of gold and over 16.5 million ounces of M&I resources of gold. The reserves and resources that we've just looked at, we're going to assign some value to those based on the prices of precious metals. And I'm going to look at three scenarios. Conservative price, we plug in the $2,000 per ounce on gold. Our balanced scenario, we plug in the $2,300 per ounce of gold, and our optimistic scenario only goes up to $2,600 per ounce on gold. That means our scenarios do match with some of the more recent videos I've published over the last several weeks, but it also means that the current price is already above our optimistic scenario. If you have followed our channel for a while, you know that we do like to err on the conservative side. So our valuations here are far from being outlandishly optimistic, and if the generalist investors do flow into some of these smaller producers beyond those Newmonts and Barricks, share prices can actually shoot up significantly higher. In either case, these are the three scenarios we're going to look at. By the way, back at myfinanceteacher.org, we do look at some more details of some of the most interesting junior developers, such as Southern Cross and Mawson Gold, that will provide that explosive torque to your investments, to your portfolio, once the sentiment in precious metal stocks improves. Moving on to costs, debts, taxes and cash, Pan American Silver has all-in sustaining costs at $1,470 per ounce. That's basically per GEO, that's per gold equivalent ounces, using the gold-silver ratio. Pan American has the smallest long-term debts at $758 million, And for taxes, I simply assume a flat tax rate of 25% to simplify and speed up the process a little bit. Pan American also has over $330 million in cash. The cash isn't actively included in the valuation model, but it serves as just additional risk metric, as we don't want these producers, especially smaller producers, to face much of liquidity problems. Moving on to Eldorado, an interesting point here is they have the lowest all-in sustaining costs at $1,240 per ounce. All these costs are based on the midpoint of their 2024 guidance. Quite similar to Pan American, they have $767 million in long-term debts, same tax rate, and they have nearly $600 million in cash. Equinox has the highest costs per ounce, but that also means highest leverage to gold prices. Their all-in sustaining costs are at $1,685 per ounce. In fact, this might be a little bit overestimated, and I'll come back to this point at the end of the video. Their long-term debts are the largest at over $1.33 billion, and they have the smallest amount of cash at over $167 million. Moving on to share statistics and discounting, Pan American has 363 million shares outstanding with only 0.07% in insider hands. At current annual production, proven and probable reserves will last for around 11 years. If you add half of M&I resources, the average mine life extends to about 23 years. Eldorado has nearly 205 million shares outstanding with nearly 0.6% in insider hand. That's a little bit better. We do want some alignment between the incentives of the shareholders and the top managers, top insiders. And the average mine life for Eldorado is at 22 years. That's for resources. And the average mine life of reserves for Eldorado is 22 years. If you add half of M&I resources, that extends their mine life to about 33-34 years. Moving on to Equinox, they have nearly 430 million shares outstanding with a very nice percentage in insider hands at 6.4%. That's pretty high and that's very positive. The average mine life of reserves for Equinox is about 27 years. Again, adding half of M&I resources extends the average mine life to 39 years. Finally, let's actually have a look at our fundamental valuation. Plugging in the gold price of only $2,000 an ounce and looking at only proven and probable reserves in the ground without any M&I resources, never mind inferred resources or any future exploration success. So basically look at this scenario as what might happen to the share prices if gold price drops out of bed here and the sentiment drops even further below through the floor to the basement. The fundamental discounted per share value of the reserves in the ground after all-in sustaining costs, long-term debts and taxes would be nearly $9 for Pan American, nearly $19.4 for Eldorado, and over $3.7 for Equinox. Our balanced scenario plugs in the gold price of $2,300, but even in our balanced scenario, we still look at only proven and probable reserves in the ground without any additional resources. In that case, the per share value is nearly $14.7 for Pan American, $27.6 for Eldorado, and $8.3 for Equinox. Most excitingly, looking at the optimistic scenario, let's plug in the gold price of $2,600, and in addition to proven and probable reserves, let's add just a half of M&I resources. So even our optimistic scenario does lean towards the conservative valuation without including any inferred resources or any future exploration success. With all that, the valuation is around $35.8 for Pan American, nearly $46.4 for Eldorado. Wouldn't that be nice? That would be 3x from here, is it? And for Equinox, that's about $16.3. That's also much higher than the current share price. By the way, the current share price for Pan American is somewhere between the balanced and optimistic numbers. So the share price versus the gold price is only pricing in perhaps about $2,400-$2,500 on gold price. So there is still some catching up to do for Pan American, and this catch-up potential is even larger for Eldorado and Equinox, as their share prices are even below the balanced valuation. So the gold price priced in these shares is perhaps around $2,200 only. Beyond that, there is an additional very interesting factor on Equinox, and I'm going to come to that right away. Here it is, the Q2 report for Equinox. The numbers that we've used so far in this presentation does not include additional production from Greenstone. So their annual production is in fact a little bit larger than they are reporting. Perhaps the updated numbers are going to come up in their Q3 reports. We will cover those, of course, in one of the future videos, so stay tuned for that. Beyond that, with a larger number of ounces produced, if you divide the total costs by the total number of ounces produced, that also reduces Equinox's all-in sustaining costs, which at the moment seem to be relatively high at $1,685. In fact, those are perhaps noticeably lower. So there's a food for thought for you as it relates to Equinox. There's also something interesting for Pan American. Beyond their precious metals and copper reserves, they also have quite a bit of zinc, nearly 900,000 tons of zinc, in fact. And taking the price of zinc at about $2,500, again, which is very conservative, currently zinc is priced at $2,900 per ton. So at the price of $2,500 per ton of zinc, the reserves they have in the ground, and that's just proven and probable reserves as of middle of this year, is valued at additional $2.2 billion. I'm quite certain that this is not priced in to the share prices on the market right now. So that's all quite exciting, a lot of interesting information here. Let me leave you with this question. Do you actually think that by the time this precious metals bull market does reach its peak, we are going to see Eldorado at around $46 and Equinox at about $16? Let me know what you think down in the comments below. Have a nice day and bye-bye.